Next question. Associated Advertising Agency AAA just announced that current financial year's income statement reports its net income to be rupees 12 lakhs. So information is provided to us that the earning after taxes is rupees 12 lakhs. AAA's marginal tax rate is 4040% and its interest expenses for the year was rupees 15 lakhs. The company has 80 lakh rupees of the invested capital, means capital employed is given to us as 80 lakhs, of which 60% is debt. So that 80 lakhs is divided into two parts, 60% is debt and 40% is equity. In addition, AAA tries to maintain, highlight the portion, weighted average cost of capital near to 12%, means 12%. There are a few questions. Compute operating income or EBIT AAA earned in the current year. Second question. What is AAA's EVA, economic value added, for the current year? AAA has 5 lakh equity shares outstanding. According to EVA value you computed in part B, how much can AAA pay in dividend per share before the value of the firm would start to decrease? If AAA does not pay any dividend, what would you expect it to happen to the value of the firm? That is a question. I request you to give answer for the first and the second part of the question in the chat box, and then third part of the question we'll discuss. Now friends, in the first part of the question says that you're required to make the calculation of EBIT. EBIT can be calculated as earning before taxes plus interest. That's it. Earning before taxes, earning after taxes divided by 1 minus tax rate. That is earning before taxes plus interest. That is the way the answer is formed. The question is providing that the EAT is 12 lakhs and income tax rate is 4040%. So 12 lakhs divided by 0.6, that comes to 20 lakhs. Plus interest. The amount of the interest is given to us in the question as rupees 15 lakhs. So we understand that EBT plus interest, that is the way the EBIT is formed. So that comes to an amount of 35 lakhs. That is the way EBIT is calculated. Second part of the question says that you're required to compute EVA. We have capital employed of 80 lakhs, fine. Cost of capital 12%, fine. We have EBIT, yes. We have income tax rate, yes. So using all this information, we'll compute the EVA. So please write down answer for the second question. EVA. It is NOPAT minus weighted average cost of capital into capital employed. What is NOPAT? That is EBIT into 1 minus tax rate minus 80 lakhs into weighted average cost of capital is 12%. So this is 35 lakhs into 1 minus 0.40. 21 lakhs minus 9 lakh 60,000. That comes to 11 lakh 40,000. That is a very simple EVA can be calculated. Next question. I want you to answer this question in the chat box. If AAA has 5 lakh equity shares outstanding, according to the EVA value computed in part B, how much can AAA pay in dividend per share before the value of the firm would start to decrease? I want you to tell me answer of this question. See, now the question number 3, we have to understand and say we have to compute the EVA dividend. EVA dividend is EVA divided by number of shares. What is EVA? It is 11 lakh 40,000. What is the number of shares? 5 lakhs. 11 lakh 40,000 upon 5 lakhs. That comes to $2.28 per share. So 2.28 rupees per share. That is answer. Now understanding of the answer. Let us, calculation is simple. The question says like this. If AAA has this number of shares outstanding, according to the EVA value you computed in part B, how much can AAA pay extra dividend before value of the firm would start to decrease? That is the question. See, understand that normal expectation of equity shareholders are already incorporated in this weighted average cost of dividend. Now, if at all you pay extra dividend, then in that case, what will happen? No problem, you pay extra dividend. We have extra earning. You pay dividend. However, when you pay an amount which is greater than 11 lakh 40,000, when you pay an amount which is greater than 11 lakh 40,000, then in that case, value of the firm would start decreasing. Why? Because now you are not paying dividend out of the earning, you are paying dividend out of the capital. That is the reason. So over here, say value of the firm would start to decrease if at all you pay an amount of the dividend that is extra dividend more than 2.28 rupees per share. So write down answer for the third question. In that, write down calculation of EVA dividend. So it is EVA divided by number of shares. What is EVA? 11 lakh 40,000. And what is the number of shares? Number of shares are 5 lakhs. $2.28. Please write down answer. So write down with paragraph, note for the answer. We understand that normal expectation of equity shareholders have already been satisfied in WACC, full stop. Write down further in that. making payment in excess of rupees 11,40,000 of dividend, in bracket I'm writing extra dividend, will reduce value of equity shares. Full stop. Again, I want you to answer this question. If AAA does not pay any dividend, what would you expect to happen to the value of the firm? See, again, you have to understand that say the AAA does not pay any extra dividend. That is the way we have to understand the question. I request you to write answer in the chat box that what would be the answer for this component. Answer of the third question is extremely simple. If at all this extra earning is not paid in form of dividend, simply the value of the firm will increase with the EVA. Right on answer. If dividend not paid, comma, then value of equity shares will increase with EVA amount. So we have to understand that if this extra dividend is not paid, then in that case, so the EVA will increase, value of the firm will increase with the EVA amount. First part of the question is simply calculation of operating income, that is EBIT plus interest. Second is again simple, EVA calculation, NOPAT minus capital employed into weighted average cost of equity. Third part of the question is good question, EVA dividend, and if at all that amount is not paid in form of the dividend, then in that case the value of the firm would increase with that amount. That is what we understand is the answer of the third part of the question.